Hello and welcome to another update video about Natgas. Yeah, Natgas seems to be struggling to push through here to the upside. Overall, the idea for Natgas is still that we are waiting for another low. So there is still a wave 2 that's outstanding for us that we want to see at some point. Maybe in the area around 120 to 150. What I need to say is that this wave 2 can already be in. And if it is, then it would be sitting probably here, on that 14th of April low. However, at the moment, this is not the primary expectation. At the moment, I'm watching if the current increase that we see is a C wave within a wave 4. Just before the final sell-off. So the idea currently is that we bottomed in a third wave here, that we made an A wave up, a B wave down, and this is now going to be a C wave to the upside. But we need a lot of patience here apparently, because even here now, that rally that started a couple of days ago is already struggling again. But this is certainly one scenario I'm observing primarily, where we ideally are now in the C wave to the upside. To 320 or above. That the view is valid as long as we stay above $2.15. And then afterwards at some point, and we will be able to specify that area a little bit further, we could expect another move down. So that's been the narrative for a while, and not much changed over the recent weeks because, to be honest, it is quite boring. Natgas tests our patience. Now, as I said a minute ago, if that wave 2 was already in, then this is not the C wave to the upside. It would be a proper impulse in a third wave rally. But yeah, let's see. So at the moment, as long as we're holding that $2.14, $2.15 level, the focus can be on higher. But I have to say that I don't like what's happening right now, because we see a bit of a strong rejection there. Okay, so it's time to also look at the bearish scenario at this stage, because ideally this current reaction shouldn't have happened, not where it happened, okay, and it's quite strong. So we have one scenario, I always try to keep it as simple as possible, one scenario where we are following the idea of an A, B, C, and we go higher as long as $2.15 is holding. However, of course, there is a direct sell-off scenario as well, because what would happen if we break below $2.15? What would happen? So from that point of view, it's time to unpack, and I showed you that before, but time to remind you of the bear case as well. In the bearish scenario, we topped already in the fourth wave here on the 3rd of March. So basically, it's not that the wave 4 is still in the making, no. Wave 4 topped already here, and we are now in the wave 5. Always remember, the primary expectation is to see eventually another low. So the idea is either to see the low directly in a direct sell-off, or after another high, the sell-off. In a direct sell-off scenario, we came down in a wave 1. We rallied in a 3-wave move in a wave 2. And this here would now be another 1 to the downside and another 2 to the upside. So just below resistance, we seem to be turning to the downside at the moment. Now, again, it's not confirmed really until we break below 214, 215, but this would be the bear case. So if we drop below 214, I will probably shift to that scenario. This is, by the way, an interesting short setup here. Now, when you watch the video, it might be too late, who knows, but just for educational purposes, I'm not telling you to do it. This is no financial advice. I'm just telling you how you can trade Elliott waves, for example, because when you know about these scenarios. So, for example, the bullish case allowed for an entry in the support area. So anybody who entered there would be in profit now. And you can take the risk out at any point by moving up the stop loss. Then when you approach resistance, and you know about the 1-2-1-2 setup that could unfold in a third wave rally to the downside, which would then be a 4 and a 5, and so on, and would head further down. Then you can of course short just above resistance. Well, you short below resistance with a stop above resistance, and this would allow for a short trade in the third wave to the downside, which could be quite profitable. Of course, there's risk, because there's quite decent risk that this resistance is taken out, yeah, at 253. But the risk is manageable, and the risk is still, from a, let's say, setup point of view, quite low, because you can set your stop quite tight. Because from an invalidation point of view, this bearish setup would be invalidated if price breaks above 253. So that's just sort of an explanation how Elliott waves can be traded, because Elliott wave gives you these nice and clear invalidation patterns. And if we really have a wave 1 down here, which is possible, and an ABC in a wave 2 to the upside, then this move, which came quite high already, would be invalidated above the beginning of the wave 1, so above 253. So let's see if this now follows through. It's going to be the bear case, and at least we have some clarity. At the moment, there's still a chance to rally higher, of course. But what shouldn't happen at this stage is a break below 2.147. Okay, so that's going to be interesting. That's what those are the levels that we need to be watching out for. And of course, if we break below 2.147, a further drop below $2.02 will confirm the sell-off. And this is the futures chart, of course. On the spot chart, it's very similar. Here, though, we already broke above the recent high. Yeah, we already broke above this high. And this is now really going to be interesting how, unfortunately, this possible third wave here to the upside fell short of reaching the 1.618 extension. So basically, whatever I told you just now on the futures chart is valid here on the spot chart as well, from a commentary point of view and higher level scenario point of view. It's just that the levels are different. I just want to test something here. I just want to test something with the fib extensions. 1 sec, just to see. No, we haven't reached the 1.618 extension, so that costs this upside scenario a little bit of trustworthiness. So ideally, this should have reached 243 at least. Yeah. Didn't. So already you see the sell-off here. But also here, you know, the comments from yesterday remain valid. As long as we're holding $2.66, the overall focus can be on higher. And again, also here you have a possible short trade setup at the same time, because you could set a short now with a stop above the recent high. Now, again, I'm not telling you to do it. It's just always try to make people aware that the way to trade Elliott wave is not necessarily to trade the primary count. It is to trade the pivots, the invalidation points. Okay. Now, how would that bearish count look like here? Because obviously we broke above the recent high. So the bearish count here would be a wave 1 to the downside, an A wave up, a B wave down, and this would now be probably a C wave to the upside or a WXY. And then we could also sell off from here. But on the futures chart, it's much clearer and much better defined. But at the moment, as long as we're holding bullish support, we can focus on higher. Also here the comment, if anybody used those trend reversal areas to enter possibly, the risk here is still high for a breakdown. So it might be worth moving stop loss. It might be reasonable. Yeah, not a direct financial advice, just general comment. But yeah, this is where we are, and you can see futures is selling off quite strongly. So let's see where we are heading to. Certainly, if we break yesterday's high, there's a really good chance to follow through on that third wave, and it would invalidate the direct bearish setup. But until then, that bearish setup can also follow through to the downside. It's always important to watch these pivot points, these invalidation points. Okay, that's my update about Natgas. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.